Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, December 10th. Okay, yesterday we had a little bit of excitement. We found out that stocks can go down as well as up. We found out that sometimes bearish divergences make a difference. So now we got to figure out where we're at and where our decision points will be for the balance of the week and possibly into next week. So let's start back at the SPY daily chart. Had been in mostly a unidirectional one-way move off of the low in late October, 1st of November. Then we got a quick lift up to this vaccine high, which was 365, and then we inched forward until yesterday. We had an outside day. We pushed higher, then we sold off, creating the bearish engulfing candle. And we've dealt with a number of these bearish engulfing candles over the last, however many years. It's not a sell signal, but it's definitely a shot across the bow. What confirms a bearish engulfing candle is selling the next day. So this in and of itself is not a get out of town bar. It is a warning flag though, and if we were to get more selling today, pushing lower, then that would tend to confirm a trend change. But we don't have that yet, so we're going to be watching for that today. Let's look at the key levels on the daily chart, which will be especially important for those of you that are, trading the daily time frame. What are the key levels? Number one, 365. That corresponds to two things. The vaccine day high, right here. And also it is the top of a $3 gap, okay, that goes down to 362. We'll see that on the shorter time frames, but just, if you've got your pencil and pad there handy, you can write these levels down. 365, 362, which is the bottom of the gap that aligns with the 20 EMA on the daily. So 362 is a gap fill, and it also aligns with the 20 EMA on the daily chart. Okay. The next level down is, let's look at it here on the 2-hour, is basically 359, 360, which is the top of another gap. Okay, so we got 365, top of the gap, 362, gap fill and 20 EMA, and then 359, top of another gap. Okay, those are the three key levels for today. We're on the 2-hour chart. We had the rising wedge. Got rejected at the top of the wedge and then broke the bottom. Okay, right here. And stopped on a dime at 366. So 366 for today is important. Why? Because it's the prior day's low. Okay, whenever you have a day like yesterday where you get that selling and then you find support at a given level, you don't want to see that support give way the following day. That would tend to confirm, the bearish engulfing candle scenario where you got follow-up selling. So a scenario for today might be, we lose 366, come down to 355 at the top of the gap, Oh, I have this here, 264. It's supposed to be 364.93. Sorry about that. I just noticed at 365. So we're at 366 is yesterday's low. If we break that, next chance to save it is 365 at the top of the gap. If that fails, you're looking at a quick gap fill down to 362. Now for me, 360, a break of 365 is my more or less get out of Dodge moment. Okay. Now, what does that mean for me or for you? I want to make sure any longs that I have are ones I really want and that haven't violated any particular level on the individual charts. Number two, if we break 365, I will be short. I will probably get short on a break of 366, and then if we break into this gap, I'll already be short, because 366 is either going to hold or it's not. And I would expect that if it broke 366, that there's better than 50% odds that it'll go down and fill this gap. So I definitely want to be short for that, if only to protect longs that I may still have on. Okay. So we got a big $3 gap, and then we got a little airspace down to this 359, 360 level, which would be the next stop if 362 were to break. And going down to a more granular level, we had the wedge. If you were an active trader and you were Johnny on the spot, a break of the wedge was a place to try an objective short. This 368, which was the prior low, was a place to get short. And then 366, look, we had the level pre-identified. We had the big volume over price bar. It stopped on a dime at 366. So we had, let's see, 1, 2, 3, 4, 5 candles test 366, and it held each and every time. That's a good sign. It not only validates the level, but sellers ran out of gas at 366. What also makes that important is if that level were to break, look at all the air beneath it. There's really not much to, it's going to immediately go to 365 at the gap, and there's a lot of air down there. So that's why I say, if we break 366, I want to initiate a short position, anticipating that there's better than even odds that this gap will fill. And that can be a good money maker for you. That'd be a $4 move. And I think that would happen pretty quickly if it were to happen. So I think you definitely want to be involved on the short side there. Again, if only to protect any longs that you may still have on. Okay, let's go to the Qs, where most of the selling pressure was yesterday. SPY was down less than 1%. IWM was down less than 1%. Qs were down 2.25%. So much more dramatic of a sell-off. I have a couple levels of importance. For me, 300 is a key, and a level just below would be 297.50, 298, which coincides with the 20 EMA. If that breaks, let's say if 297.50 breaks, I see a quick move down to the 50, down to 290. So it's really important for this, I'll call it a support zone, 300 to 297.50 to hold that 20, regather, and then hopefully move back higher. You can see, and we've been talking about it, the bearish divergences that have been in place. We don't want to see PPO momentum cross, bearish cross. We don't want to see that. And we don't want to see RSI move into the lower half, into the bearish regime below 50. We want to keep that stuff at least curling up at 50 and then, dipping and then coming back up on the cues on momentum. So for those of you that are, that have tech exposure, I would definitely be highlighting 300 and 297. Let's look at it on the 2-hour. We were, coming along, quick advance. We built a support shelf here at 305.50. We'll see that on the 30-minute chart. But once that broke, that was definitely a place where you could have initiated a short, and I did yesterday. Actually, I had told you that on the day prior, I had initiated a short at the same place, and then it reversed and I got stopped out. So that was definitely a place where I was keying off of as important. Yesterday, there wasn't the follow through. So, I was stopped out. But yesterday, got a quick move, and then I covered down at 302. Now, it's not shown as clearly on the 2-hour chart, but the key is 300. Let's look at the 30-minute chart and you can see it better. So here's yesterday where I tried a short, reversed, got stopped out, and then today, yesterday, Wednesday session, put on a short here, covered at 302, and then at the end of the day, I put on a hedge with 301 puts. Okay, so it had a little bounce, and then they faded it back down towards 300 at the end of the day. So 300 is our prior low. We don't want that to fail. And you may be interested to know that in the overnight session, this 300 level was tested again and it held. That's a very good sign. Okay. I do this as a matter of course all the time, is look at the overnight high and the overnight low and mark those levels. They are often magnets during the regular session. Excuse me. Magnets in the regular session, and they, can mark highs and lows. So last night they tested 300 again and it held. And now, we're bouncing a little bit in the pre-market. Not anything dramatic, but bouncing nonetheless. And then here is our 297.50 level. It's 298 to 297.50. You don't want, if 300 were to break, coming down here, I think that would be rather fast, and then we're going to be on the, the wrong side of the mountain, as it were. um, with further selling. So 300 is definitely a level that we want to hold. And you guys know that I was long Facebook and Apple. We'll talk about those individual names. But with these, DoorDash and some of these high profile recent IPO, Snowflake and some of these other big, uh, larger IPOs, I think they're using the mega cap names, the Amazons, the Apples, the Facebooks, the Microsofts, as ATMs, reallocating monies and pulling monies out of those mega cap names to fund the IPO names. So we know that the big five comprise, roughly 25% of the Qs of the index, of the cap weighted index. So if fund managers are using the big five as ATMs, the Qs broadly as an index are going to take a hit. Now, the thing we got to keep in mind is we got more IPOs on the board going forward. Airbnb, and I can't even keep track of them all. They're coming, they're coming every week, it seems like. But on these big marquee names, I think fund managers, they want to be involved. They don't want to, put out a quarterly report that, DoorDash went up, 50% and they were on the sidelines. So they want to be involved in these names, even if it's just window dressing to, to say that they're in it. So we may see further pressure broadly on the index at the index level because of these IPOs. I don't think it's anything, particularly personal against Apple or Microsoft or these names. I think it's just a matter of jockeying around the fund allocations for these new issues. IWM, hardly any pressure at all. I mean, it was down 0.7, excuse me, 0.7%. That's nothing. We had established a level here at 188, and it made it a morning push and then let go, but then found its footing here at 188. Now going forward today, just like the other indexes, you don't want to see 188 break. If you do, I would be, initiating a short and looking for a move to 185, which was the original breakout level. So if, as long as price can hold 188, I think it's fine. I think the bears assert themselves below 188 and push it down to 185. And below 185, we're back in this prior range. And then you can almost count on 181 if there's more selling. Here it is on a exploded scale on a 30-minute chart. And the nice thing about these technicals, it's like paint by numbers, right? We came back down, we broke this 190, which was a level, and we went right to 188, which we had pre-identified. This was an area where I got short yesterday on a break of 190, and I covered, down in this area. I did not get back long again. So it was just like a quick hit, and then it put in a bounce. I have not, I looked at the futures this morning. I mean, it's 6 o'clock right now, and small cap futures were up. So today, two levels are important. number one, hold 188. Number two, a recapture of 190 would be bullish, right? Break of a level, hold a support, recapture of a key level. That's, that's the sequence. That's the sequence that we, always go through, in our active trading. If you're trading on the daily time frame, in it to win it long, I think anything above 185, it keeps the chart bullish. If we go back here, all the way to where this run started, pulling back to 185 is about, I haven't put the fibs on it, but I'd guess between a 38% and a 50% pullback, and that's perfectly fine. If you're on the daily time frame, I wouldn't be panicking here at all. I think the small caps are showing relative strength, and I still think they're on the right side of the chart. You can see value here, the large volume over price bars all kick in at 185. So I think there should be quite a bit of support there on small caps should there be some further selling. Facebook. Oh man, I was really hopeful this thing was going to blast off. Just never happened. Igniting candles, they faded it. Igniting candles, they faded it. Igniting candles, they faded it and then sold it off. This name has come into the spotlight. I think all this week they got sued by the EU, and now Department of Justice is talking about monopolistic practices and all this crap. Whenever you got all that going on, it's gonna be noisy, and having long options that expire a week from tomorrow, I don't have time to wait. So I took a decent loss on this one, and and the thing is, here, it was sitting pretty. They pulled it back, and even here, renewed hope that it's going to blast off, and it just never happened. So cut the losses, move on. Now today, 280 is your pivot, even though I have the arrows not exactly in the right place. 280 is your pivot. Above, you can be bullish. Below, bears are in charge because it's back in this prior trading range. You can see the deep look yesterday all the way down to this 273.50. If you see Facebook, come up to 280 and hesitate, that's your objective short with a stop just above, and then look for a move back down to 273.50 and possibly all the way down to 266 if more selling pressure comes in. Apple was another one that I was long. I was long 122.50s for December, right? Igniting candle, back check the breakout, back up to the top, breakout, back check the breakout, advance. Now, I could have sold right here in the morning, and I didn't catch it. And I don't know exactly when I sold it. It was probably right in here just to get out. I got out even. So I was lucky, I, made a dime or something like that, but basically a scratch trade. But price came back into the trading range, and that's something you don't want to see. This breakout should have held, didn't. So on this break here, that was my cue to get out. Now, if you are new into the position or looking to get in, as long as it holds 121, you're good to go, right? Because this was the initial breakout and it has come back and held. So for new traders, today, 121 is your pivot. Above, you can be bullish. And below, I would expect to move down to 120. And if that doesn't hold, then you're back into the, you're back into the soup again, as it were. But there's a chance right here to save it and to move higher. But in my own personal circumstance, with options expiring in 10 days, I'm not going to wait and hope. I think the momentum was broken here for that upside move, and now it's got to rebuild and see if it can break out again. Now, another buy point would be this 123.25 area right here. If price were to come back and reclaim that, I think you can get long right here and then look for your 128 level. Tesla, kind of a momentum breaker here, moving from 650 to a low of 590. That was a rough little run here. We've got an open gap below. Notice the big volume over price bar. For me, the kind of get out of Dodge is 580. That's where this big support line lies, at 580. Now today, you can use 600 as your pivot. Anything above 600, you can stay bullish and look for 625. But below, I would be targeting 580. And if 580 breaks, you've got a $10 gap fill and probably a move down to this 560 at the bottom of the box. So a concerning, multiple bars there that kind of, knock the wind out of this run. Probably going to take a little time to gather itself and get some momentum. Microsoft. I mentioned yesterday that there was a lot of upside call buying in Microsoft, and they got to the top of the box and they sold it off. So if you look back, I mean, this range between 217 and 209 has contained everything, with a large volume over price bar here at 213. I could put move this midpoint line up a little bit and put it there. But for today, this 212 is your pivot. Above can move higher, but below, I would favor 209. And actually, I favor 209 anyways. After a run to the top of the box, usually when you get rejected, you go all the way back down. That's what happened over here. But like I said, this has been range bound for basically 6 weeks and hasn't been able to do anything. Now that doesn't mean you can't, make money inside this big, $8 range, but it's just a little, you're not going to get the, the multi-day breakout that you would, coming out of a consolidation area. So anyways, 212 is your pivot. Above is okay for bulls. Below is okay for bears. Amazon has been stuck in the weeds. Again, I mean, keep saying it day after day. Break a 3150. Here comes 3100. There's in the chat room, in the trading room, I was saying that, the free 50 club. I mean, short 3150, and there's your $50 move. We've shown multiple places over here, get long on a recapture of 3150. There's your 3200. Breakout from 3200 is 3250. Rejection, back down to 3200. 3200 fails, back down to, I mean, you know, 50, 50, 50, 50. That seems to be the modus operandus right now for Amazon. So now we're back at 3100. As long as 3100 holds, you got a shot at 3150. If 3100 breaks, I'd be getting short and looking for 3050, a move back down, another $50 down to this 3050 level. And that's how I would continue to play it if I was, you know, actively trading Amazon. Google, big disappointment here. This big, nice, impulsive move out of 1795, you know, breakout, back test, big move up to 1840, consolidation, back test of 1795, back up and then fail. So this looks like a fake breakout. If you were actively trading it, you know, the move back into the box was your short and you got, you know, 35, 40 bucks out of this. So right now we're back to 1760 at the midpoint of the box. Anything above, I think you can be bullish and look for a move back up to 1795. But if 1760 were to fail, I think you're back down to 1720. And then finally wrapping up with Netflix. Breakout from 494 up to 505, back test the breakout. Big impulsive move to fill the gap, this long-standing gap up to 515, filled that gap, got rejected at the next gap, and then, you know, gave way, stopping. And it's not a coincidence that it stopped back at 494 again. So if you're actively trading that and got all that, there were certainly you know, opportunities to, you know, actively trade that sequence, because notice how price stopped at each pre-identified level. You know, we got a bounce into this resistance level at 515, was rejected, and then failed at 505, and that was a, you know, good for another $10. So anyhow, you can remain bullish above 494, but below 494, it's going to come back down to 485 and possibly 475. So from a technical standpoint, mission accomplished, got the gap filled, and now we're back in a trading range. So that's the story on Netflix. A lot of active trading there. Lot of big bars to handle. So let's recap where we're at. After an extended run with, you know, extended bullish sentiment, extended technicals with bearish divergence in place, we got some selling pressure that was focused on the Qs, where it doesn't really matter why, but my hypothesis is that the mega cap names are being used as an ATM to reallocate those funds towards these new, larger, quote, exciting IPOs. And if that dynamic continues, you know, with the Airbnbs and these other names coming on, we might expect further selling in the cap weighted Qs, because the top 5 are 25% of the index, so we got to be ready for more selling. Know your levels. 300 on the Qs, and, you know, triple final, you know, line is 297.50. You want to see 300 hold? You could probably live with 297.50, but if 297.50 goes, whole new ball game. Then we're in, full, corrective mode. Okay, moving on to SPY and IWM, much less selling pressure. IWM, almost none, 0.75%. You still have to pay attention, but not much selling pressure there. On SPY, not much selling pressure, but still need to be aware. We want to see 366 hold, but definitely 365. Below 365 is a $3 gap fill, and that would be a place where, at least tactically, you would want to have some hedges in place or outright, puts for directional trading on that $3 gap fill. And if we start seeing, 365 on SPY fail, and 297.50 on the Qs fail, and 188 on IWM fail, that would be the triple curse, and into a full corrective mode type situation. So that's what to look for today and tomorrow. Be very tactical here. My opinion is I still am leaning bullish, but not as much so. Got to be tactical. Got to keep your head on a swivel and not be afraid to either take off longs or add short positions, either as hedges or outright directional bets if more selling comes into play. So, okay, longer video, but I think it was an important day to recap, because I think as technicians and traders in general, you have to take note of when something changes. And yesterday was definitely a day to take note, to sit up taller in the chair. Something changed. And now we have to see if that change follows through, or if it was, a one-day wonder and back into rally mode. So if you're new to the channel and like what you've heard, please hit the subscribe button and the alarm bell. I hope you can see from the discussion this morning, the levels have worked remarkably well. And I think that's one thing that I'm really proud of, is identifying those levels. I may completely screw up the trade, but that's my own doing, right? We're all responsible for our own execution, but the levels have been right. And if you can trust me on the levels and then focus on your own execution, you'll truly be in the driver's seat of improving your own performance. If you look over in the show notes, there's places to links for the blog site and a place to register for all my content, where you'll get an email for everything I send out, nice and tidy right in your inbox, and you'll never miss a beat. Plus, you'll get an invite to our trading room, and we'd love to have you there. We've had a lot of great discussions over the last few days. Everybody kind of has their things. Some guys are, deep into the SPACs. Other guys are tech and cyclical. But it's definitely a stimulating place to exchange ideas and build camaraderie between aspiring traders. So, hope you guys have a good day of trading. Remain centered and balanced. Focus on your levels. Try to keep your emotions at bay. And I think everything's going to work out fine, and you'll have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.